Do you guys think that they were never destined to do? What do you think they did wrong, and do you think someone else can come in their place?
Yeah, so I mean, telcos have a significant asset in their possession, which is not just the phone, but the SIM on the phone, right? They viewed the SIM of the phone as a critical piece of real estate that is equivalent to the chip on a card, and therefore they can kind of move into payments with that promise of security, which is actually true in the sense that you can secure payments with that piece of hardware. But I think where they fell short is to find the right commercial model with the banks. And again, not to want to kind of keep on harping on the same thing, but any of these non-traditional players moving into payments will have to do that, bringing along the banks. It's what Apple did very well in the US. They just didn't launch it by themselves. They launched it with 5 banks, and right now they have 600 banks in the US signed up. It is very important to find that right business model in order to scale, and I think some other telcos underestimated that piece. Softcard, which is a coalition of telcos in the US, is still trying to get ahead, and they are getting actually some banks on board. So I wouldn't say that it's a lost case, but they like Telefonica is doing, they really need to rethink a little bit what chips to play and how to move it.
So I'd have started from the other side, actually,
no,
and maybe
building one thing, but actually, so not specifically about O2 or even the telecoms, but actually, kind of wallets were the in vogue thing 2 years ago, and all of a sudden, everybody wanted to have a wallet. And actually, I think the mistake most of them made was not starting with the consumer. When you compare one wallet to another, outside of some markets where they serve a very specific purpose and drive value to consumers, it was kind of hard to see what the point was. Why did people need or want an O2 wallet?
I very much agree with that. I think it's interesting to note that sort of all the major technology players, so Google, PayPal, Amazon, have made forays into building wallets, and I think it's fair to say the majority of us are not using a wallet of these kinds today. So on that regard, it would seem that their efforts so far haven't been successful. Whereas if you compare with, so there's this kind of romantic notion of this idea of a mobile wallet that will no longer need to be carrying around all of our cards, but very much agree sort of the way to focus is on the consumer, and I think the launch of Apple Pay is sort of a testament to that. One thing they do very well is relentlessly focusing on the consumer experience. And they announced that within 72 hours they had 1 million users signed up to Apple Pay. I think that's explainable as a direct result of their focus on what the requirement actually is.
Any final comments?
Yeah, I guess just one comment. Maybe I think with the mobile phone network operators in particular, I think what will be interesting to them is that they've already got a system and a model by which they take their payments as either prepaid or it's monthly billing, and often they settle out to their merchants on sort of 30, 45-day cycles. And so there is a sort of a credit flow issue there. So either they launch their own wallet, some do, it depends on jurisdictions. Deutsche Telekom in Germany bought Click and Buy, they've integrated it to their wallet and it's working really well. What might be interesting with the telcos is if they can find a way to allow people to pay for a broader range of goods than just digital goods through the normal monthly payment and prepaid system. There's an exemption currently, they can take payment for digital goods, but that's it. So sort of downloads, videos, apps, that kind of thing. I think we will see developments there in terms of innovations about how they can take payments for a broader range of things through their normal billing systems.
I have a Vodafone Labs or I think it's Labs, they have a SmartPass project, so I have the contactless tag from Vodafone hidden inside my iPhone case, making me feel less sad that Apple Pay is not currently available for UK issued cards, so I can pretend I have fake Apple Pay with the NFC card hidden in my iPhone. But as soon as Apple Pay comes to the UK, I'm going to take that tag right out of my phone, right? And why is that? Because I have the better experience all round.
Thank you. So yeah, questions from the floor. Anything on your mind that you'd like to elaborate on? Question in front.
Yeah. And I'm Guido Desbaksis from Fidelity Growth Partners. Thanks everybody for really interesting insights. I think Jonathan, you mentioned that this consumer ownership is changing. So I guess my question is, what you feel the banks and card companies, what role will they play? Will they become more of an infrastructure back-end providers and lose this direct consumer touch to Apple and other players?
Yeah, so that's where I kind of run out of time. But so I think the jury is out. I think there's not one recipe that fits for everybody, right? A number of people will be quite happy to work with an Apple, a Google, a Samsung, a Facebook. Many others might not, and you know, it's kind of funny because it's very emotional, right? I mean, right now, I mean, most Apple users or iPhone 6 users seem to be quite comfortable, although many haven't actually loaded their cards in, right? But they're a lot less comfortable with a Google maybe, or with a Facebook, or with others. So I think the banks really have a play here. They, you know, will want to keep the consumer experience within their shop, and it's normal because it's their consumer. But at the same time, I think banks are also realizing that they will have to honor the consumer choice, and that's why in the US banks are actually agreeing to enable Apple Pay. Don't forget that it's actually the bank that decides whether your card can be enabled.
Yeah.
And so they do when they do that actually is a, you know, to their credit, it is following the consumer, right? And so to me I think we'll see a number of things. I think you as merchants have to also follow your consumer, and you know, if those solutions come out, you know, I would hope that you're supporting both the bank solutions, which will be probably like, you know, against the brand that we're offering, the Masterpass brand, as well as some of these digital giants.
A couple of comments. Just, I mean, I think the bank's going to have to react. You've got to understand what is their model. Their model, they don't sell things to people necessarily. They might sell investments, insurance, but the core payment account, often they don't charge for that. But what they're looking for is your deposits, which they then use in their business to lend to other people. So if they're losing those deposits, if people are no longer placing their monthly salaries into the banks en masse across the EU, the banks then lend it to make money on those loans. If people are not putting their salaries in, if they're paying for things through other means, PayPal, other e-wallets, and the banks aren't getting that money, which means their ability to lend reduces. I think another issue, and it's interesting you mentioned it, in terms of the banks ultimately have the say-so as to whether that person's got the money and allows the card. It doesn't matter whether you're paying through your mobile phone billing account. Ultimately, even the mobile phone biller needs to know you've got the money in your bank. There may be long-term change there. The Treasury came out with an interesting paper responding to Bitcoin, saying, yeah, we see what Bitcoin's doing, no real comment. What we like the look of is the so-called digital ledger. Currently, I mean, it is the case that the Bank of England will know every single pound it's ever issued. It's out there somewhere. It's got a ledger of that. In terms of who owns those pounds, that's really with the banks. The banks know where that money is at any one point in time, predominantly. Some of that money might actually be, say, e-value with someone like PayPal or in a wallet, but predominantly it's all with the banks. What the Treasury thought was interesting was we may move to a system whereby there is a separate, independent digital ledger that actually can recognise who owns what money at what point in time. So in fact, you'll be going to that, whatever system that's going to be, to work out whether that person has the money, and that is what actually releases the authorisation. Now that's not going to happen soon, but 10, 15, 20 years down the track, and maybe I'm not thinking quick enough, it could be, you will see a situation where the banks aren't the ultimate arbiter of whether somebody can authorise a payment or not.
So to your point, actually, I mean, I'm talking every day to these big players, right? None of them really have any interest to move into regulated banking space, right? Quite the contrary, right? They want to stay away from that. They want to stay away from fraud. They want to stay away from credit and all that. It's not a very sexy business in their view, and so that is actually why they are viewing themselves really as an interface to what already exists, to enhance the consumer experience, to really improve the whole thing rather than to overtake it. So that disintermediation risk exists from a consumer relation perspective, from a consumer kind of interface perspective, not really from an actually underlying business, as far as I can see. So and that's because of regulation.
But you may see, I think that's right, but you may see people who want to be banks change. I mean, there are it would be very interesting to see. I'm not going to make any comments about whether some of the technology providers and mobile phone networks say, well, actually, I want a banking license. I'm going to bring banking to my game. I'm going to buy a bank. I mean, I'm not, you know, that would be interesting to see.
I'm trying to get some more questions in the back of the question.
Mobile and online payments today cost more to merchants, so their cards are not processed, they're more expensive than in-store payments. Because I think they're considered more open to fraud. Things like Apple Pay and NFC, having a chip in the phone, theoretically make the phone safer, make the payment through the phone safer. Do you think those fees will come down? Do you think those fees will converge? Because I'm not seeing any sign of that happening at the moment.
Well, so as far as Europe is concerned, this becomes a little bit of a moot issue because regulation is solving that anyway. What you will see is that indeed the quality of the transaction becomes very similar. Therefore, your fraud losses will become similar. And actually, once you have a fully authenticated transaction, you have what we call a liability shift, right? The liability for fraud shifts from the merchants to the issuer, which is the case with the Apple Pay solution. It is a fully authenticated transaction. We recognize the fingerprint as a CVM, you know, we like using acronyms, so cardholder verification method. That is a valid cardholder verification method, and so liability shifts to the issuer. So that is something that will exist in Europe the moment we bring it here. But the actual economics itself in Europe becomes a moot point because everything kind of settles at a really extremely low rate.
I mean, you mentioned regulation has stepped in to change this. It has been an issue, and it'd be very interesting to see whether that issue does continue in the online world. Certainly, merchants have had the position where they've had to sort of take all transactions on a bundled basis. They've not been able to see whether one particular card issued by a particular bank is costing them more, and therefore they want to reject that. The regulations have addressed that, so now merchants are entitled to see what particular payment instruments are actually charging them, so it's unbundled, and they're entitled to refuse some and not others. What will be important for them is to make sure if they go on to an online world that they can also have the visibility to select what types of payment instrument they're going to accept. And if they've got that visibility, ultimately their choices should drive more competitive prices.
Yeah, Franz?
You mentioned particularly simplifying cross-border payments. We do a lot of business internationally. We use Stripe, and it's fantastic where it works. But we do business in Iraq and Nigeria and places like that. And I just wanted a little bit of a take from the panel on the speed with which places like that are going to become easier to deal with, so I'm spending less time in Western Union.
So maybe I'll start on that one. And I mean, to be perfectly honest, I think the short answer is not anytime soon. So I think what we certainly see happening in Europe is this degree of convergence. Although, frankly, even in Europe, I'd argue it's gonna take a while to settle down because you've got a bunch of contravening forces all coming together. So the Visa commitments to the EU have inadvertently made it cheaper for some retailers to offshore for the next 18 months until it will swing back the other way. What MasterCard have done is much simpler, but then you've got things like PSD2 coming down the path. There are questions about how different countries will or won't implement that. The Italians are known for doing it somewhat liberally. The French are known for copying and pasting it. The British are known for changing all the Z's to S's, or vice versa. But I think outside of that, you've still got lots of pockets where you see people, different countries either moving not necessarily towards globalization. So, what happened in Brazil last year where all the issuers kind of banded together because they own the network and, effectively tried to just shut down cross-border trade. I don't think you're going to see that change anytime soon, to be honest.
Well, I would add that, so you mentioned Western Union, right, which is a very good point. So the cards traditionally are viewed as instruments to buy stuff. That's what you do with cards, not to send money. And that's a very simple reason is, there's no like keypad or something on the card to do that. You move to digital and sending money and receiving money becomes a much more natural use case, right? And so we actually believe that this whole transition to digital and this connected consumer means that suddenly that use case which for many people in the world is a much more important use case than buying stuff, is actually to be enabled. So, it's actually, I would say, beyond kind of the Apple Pay stuff, it is our biggest investment right now, is in that kind of financial inclusion exercise, making sure that we can send and receive money on payment instruments which are digital. So you already see, for example, that we're connecting Kenya, we're connecting Nigeria to that. I actually happen to believe that the social networks can play a significant role there because they actually know some of these corridors, and players like Stripe can marry that all together. So I think expect quite a bit of news on that front in the months and quarters to come. It is a an enormous opportunity, and financial inclusion is important. So.
It's a really great point. Like, the internet made it possible to communicate online, in real time with anyone globally, and yet it's impossible to do payment often in many cases, and that's just completely broken. So, hoping to build on the back of a lot of the work that's going on and working with many people. That's absolutely what we're working on at Stripe, is making it super easy to transact online with anyone, regardless of where they are, regardless of how they want to pay, regardless of the currency they want to pay in versus the currency you want to receive. You shouldn't have to know or even worry about what your customer's chosen way of paying is, whether it's carrier billing, whether it's whatever payment method. It'll probably take us longer than a couple of weeks, but I hear you.
I think it's quite a fragmented market. There's lots of transactions to happen there. I think payments and remittance overseas has often occurred through sort of agency models, people going into their hairdresser, their local convenience store in wherever in London or whatever, handing money over the counter and paying through. You get experts in the Ghanaian corridor, the Kenyan corridor, and there's trust in that community. That community know how they speak to each other, how to send money back to their families. So it's very fragmented, and you get leaders with a volume in particular corridors. So I think there's transactions to happen. People, there'll be acquisitions, activity, and hopefully a few providers will come through that've got good coverage across a broader number of corridors. And then hopefully that begins to get digitised and goes online, and you're not handing over cash, which actually there's a higher instance of fraud. If people are handing over cash, it's easier for there to be fraud events there. So that market needs to develop a lot.
I'm conscious of time, and I want to give you guys a chance to speak to these guys one-on-one before we wrap up at 11. So I'm going to ask you a last question, and I want a one-word answer. If you guys had to pick one startup or one sort of concept, do you think this is going to be the next big thing when it comes to processing or dealing in the payment space? It can't be Stripe, it can't be Divider, obviously. But one company, one startup, one concept that you've seen that's going to be massive next 2-3 years.
And the concept is global.
Okay, fine.
Digital.
I think if I had a couple of bucks to spend, I'd set myself up a payment initiation provider. The PSD2 allows it. It's that intermediary platform between merchants and banks that can go into your bank and push money over. The regulations permit it, so the banks can't resist it. I think payments currently go around a big loop there. It's just cut across the corner, and I like that. And I think that there's interest there. And it may be that actually some of my panellists today will be thinking about getting into that space themselves.
That's a lot of words.
Yeah.
If
Okay.
I was-
Well, I'm talking about my money.
Marketplace businesses are exploding. That's super exciting.
So I'd have said convergence, and I think it's cross-channel across the payments value chain. Everybody's moving into everybody else's space.
We round up.